Yo, what's up, guys? Welcome back to today's video. So today we're gonna be covering a couple of things in terms of ICC, how to trade ICC, which is practically price action and market structure, right? So we're gonna be focusing on that and also emphasizing on something that I did speak about in my last video. If you haven't watched it, please watch it. It's basically I was talking about my story and also what you need to do coming into Forex. So you can also, probably shorten your learning journey and also, be able to grow in your trading career, you understand, and take it to the next level because you can't keep on donating to the markets, and you can keep on, doing the same things. So it's something's gotta give, you gotta have a turning point in your life. So if you're new to the channel, please do me a favor. Don't forget to like the video and also subscribe and turn on your notifications. And also, if you want to join our free on Discord community, there's gonna be a link in the description down below, or you can find it on our page, on our my YouTube page, which is this one, on the header. On the description on the header, you can find the link right there. All right, so without wasting any time, so I'm just gonna, be breaking this down. So some people will ask, which pairs react to, ICC, and how can I trade ICC on which pairs and all those kind of things. You get what I'm saying? So it's all about structure and market structure. So we're gonna be deleting everything over here, and then I'm gonna give you a brief introduction in terms of how to be able to trade ICC, which is, like I said, is basically price action and market structure, right? But market structure at most, you get what I'm saying. So with that being said, um ICC basically is a three-way process, in terms of, you're gonna have an uptrend, and then obviously at this here, you're gonna have that high, right? Price would create the high at this area and then go and create a low, right? Price will go then create a low at this area, and then price will go above and then create now a higher high. Why do we say this is a higher high? Because it is higher than the previous high, and then also below here we're gonna have a higher low because it is higher than the previous low. You get what I'm saying? So obviously, as the chart does that, it's gonna go and create the high, right? But before the chart goes and creates this high over there, the chart obviously has to give you structure before it gets to that level. You get what I'm saying? So in terms of doing that, we have this high over here which got taken out, right? We had a breakout where price broke above this level over here, right? So this level here in ICC, we call it an indication, right? Indication, right? So some of you might know it as a breakout where price broke above a level or broke above a recent high, and then price made a higher high above that level, right? So we can expect price to probably come back to this level to retest this level, but we usually call this in the ICC the correction. So price will come and correct, price correction, and from the correction emerges the continuation. You expect price to give that continuation to the upside. So price can then be able to go up and make that continuation, right? Price can be going up to make that continuation. So according to Sai, if you know ICC, you know that the person who made the process famous is Trades by Sai. You can search him on the internet. You can find him there, right? So with that being said, according to Sai, uh, use buy above where price has shown you before, that price can be bullish and you have your stop loss just below the higher lows, right? So with this being said, this is the three-way process I was talking about, but overall this is just price action. Some of you know this as a breakout. This price coming to retest, it can retest either into the previous highs without breaking this low over here, and or just above the previous highs, just touching there, and price going to the upside. So you can be able to look for that continuation. And most of you don't know how to do that if price didn't come all the way to into the previous highs, but just tapping above this level of support, which was a level of resistance. When price broke above it, it became a level of support and price came back to the downside. Now we have buyers which are sitting here, which were able to push price above this level, because previously we had sellers which were pushing price to the downside, but price ended up breaking above that level. You get what I'm saying? So that's basically it. Even when you take it to the downside, more or less the same thing. You get what I'm saying? More or less the same thing also, where price would be doing the very same thing also, right? Where you have a level of resistance where price was a level of support where price was above, and then price ended up breaking it, and then probably price can come and make it a level of resistance, or price can break below that level, and then go to the downside, continue going to the downside, right? Or you can make things much easier. You can say this is a resistance if the trend is upside, and if the trend is downside, you can say this is a level of support. Though, so we have sellers here, we have buyers here. So basically, those are the levels that I'm talking about. You get what I'm saying? So basically, the same thing also happening. We have a low over here, right? We also have a high over here, right? Or you can say, let me just make it easier for you, right? Um, you can say this is a lower low, because price has to come somewhere from the upside, and this is a lower high, right? A lower high, right? So just as you can see, price will continue giving you lower lows and lower highs as long as it is in a downtrend. So similar thing also, this would be the indication over here. This would be the indication to the downside, and this would be the correction to the upside, where price would be doing the correction to the upside, and this would then be this would be uh what I said about that. This right here would be the continuation. I don't know why this thing, all right, it's not a problem, right? So this right here would be the continuation to the downside. That's where price has showed you. So similar thing, according to side, you can sell anything below, stop loss just above the lower highs, and then obviously taking it to the downside. You get what I'm saying? So like I said, it can also correct into or just up, below, the lower highs. I mean the lower lows, previous lower lows. So the correction can go either into or just below. Same thing also here. It can correct into or just above. Get what I'm saying? So this is the ICC three-way process that I'm referring to. So in terms of targets and all those kind of things, people be trying to catch crazy moves and all those kind of things, but which is not always the case, where price ends up coming to take you out in most cases. Get what I'm saying? So I need you to understand what I'm gonna teach you here, what I'm gonna show you, some of the tricks or some of the confluences that we do have on the hustle FX. You get what I'm saying? So like I said, I'm just gonna delete everything. So as you can see, our top-down analysis started from the 4 hour. We like to use the 4 hour preferably. You get what I'm saying? So we had this level over here. So for also others who don't know how to mark their chart, or they can tell lower lows and lower highs or those kind of things, you can use this indicator over here, which the name of the indicator is the higher high, lower low strategy. You don't change anything, just leave it as is. You get what I'm saying? So this indicator can help you very much with marking up your charts. You can either use it from the 4 hour or the 1 hour. So in terms of to get those nice clean understanding in terms of what the chart is trying to show you. You get what I'm saying? So as you can see, price has been bullish to the upside. Price ended up making that higher high. Price broke below this higher low where price made a higher high from, right? So we had a break below this level. So we can take this level over here, right? We can take this level over here and mark that level, right? We had a break below, so that means this price gave us an indication below this level, right? So now you can switch back, you can switch it off back. Get what I'm saying? So now we have this indication below this level, and then price went up to correct. So like I said, remember I did mention that price can either correct back into or just above, or just below the previous the low that price broke from. You get what I'm saying? So we had a higher low which was made from here. Price broke below, gave us an indication, and went all the way up to correct that price. And then, as you can see, price came all the way down. So according to Sai, this is how you would have should have taken an entry. But my thing is, you wouldn't know where to put your stop loss, because price, as much as price would have as much as price came back from this low to the downside, price could have easily also went up a little bit further to create that lower high, so that price can go down to the downside. You get what I'm saying? So there's no, in this case, you wouldn't have got into the opportunity. You get what I'm saying? So one of the things that I'm always trying to teach, in the Hustle University, is to understand market structure. You get what I'm saying? So it was a good trade to the downside, obviously taking it to the downside. But if you are new to this thing, one of the ways I also can recommend is that you stick to this, because that's where the indication came from, right? So that means that between this high and this low, these are the only highs and lows that matter on the market currently. Whatever is in between those levels, that would mean, you know, as much as price was going in between uh, these two levels, before price was in between these levels, you wanted to see a break either above or below these two levels, because price made a higher low, made a higher high. So this is a low, this is a high. So price made that, and then you wanted to see either price can break above or below, and price get end up breaking below. So now this low shifted to this. You get what I'm saying? So this is where price ended up bringing the indication. So we have this. So that means anything below this here, anything below this, between this high and this low, would be bearish. You get what I'm saying? What do I mean would be bearish? Anything below these two would be bearish. You can expect price to go create a lower high and then come back to the downside. You get what I'm saying? So because of this low, this low here is where we expect price to come and correct into or just below that, and then continue to the downside. As I'm saying, if you were gonna take a trade, even a 1:1 wouldn't be a problem, because of this trade was gonna be a win trade if you took it like this. You get what I'm saying? So you can, if you are still struggling with knowing where to enter, whatever the case may be, this would have been one of the ways you could have entered. You get what I'm saying? So with that being said, also in the Hustle University, we have some of the things that we usually use to be able to get into trades. Like now, as you can see, price didn't come all the way into to give a structure, so you can break below, and you can use that structure where prices made a lower high to enter a trade to the downside. Get what I'm saying? So now you can go down to smaller time frames, the likes of 15 minutes. You get what I'm saying? You can go down to the downside, right? So as you can see, price is just going to the downside, give us lower lows, lower highs, lower lows, lower highs. Then we had a higher low. Like, okay, price is giving us a higher low. Price went up all the way up, right? Almost equal highs, and then made another higher low, right? Price broke above this high here. So in terms of entries, how to be able to take those nice clean entries. We know price, we knew on a bigger time frame, price is correcting to the upside. So it can either correct just above or into, the previous lows. You get what I'm saying? So what we usually do is we can take the trade over here. We can have this also be counted as part of ICC, because where you can find trends, you can find trends on the 4 hour, the 1 hour, and the 15 minutes. That is for trends. You get what I'm saying? This is usually for trends. You can find trends on these timelines. You get what I'm saying? On these time frames. You get what I'm saying? So you can find trends here. And as far as entries are concerned, you can find entries in between also this the 15 minute. You can find entries on the 5 minute, you can find entries on the 1 minute, depending on the type of time frame that you will be working around. You get what I'm saying? So if you're working around the 4 hour, kind of indication or price action, something like this, you can just use the 15 minute to get an entry. But understanding market structure, it is very important, so that when you get to those things, you don't end up forgetting any of those things. You get what I'm saying? So we had, remember these two. Always remember these two. You get what I'm saying? So we had price make a high, make a higher low, and then price broke above that level. Price came back to correct. So one of the ways that I can also recommend, same thing that I did, like I showed you that entry that you could have taken to the downside. Obviously, having your stop just above the lower highs. One of the ways you can do that, you can also do that on a smaller time frame, because price gave an indication, came back to correct price. One of the ways you can have done it, you could have been looking for a 1:1. So as you can see, price stop loss just up below the high lows in the 15-minute, and then there was your 1:1 trade. As you can see, your 1:1 did hit. You get what I'm saying? So in terms of being in the entry at the moment, this is what would have happened, right? You would have had price obviously making this high, making this high low, and on the 15-minute, and obviously breaking above this level, giving an indication. So you would have a sell stop waiting at this area. Here, there's no enter technique. You just have price action at and market structure to play around with. So obviously applying ICC on top of that. You get what I'm saying? So you had this, and this is the correction price. Price is correcting to the upside because price broke above this lower high, and also this one. But probably I would take this one, this lower high here, and price made a higher low. Price went to the upside. So price, whenever it's making higher lows, that means price is shifting to the upside. Like you see, price was making lower lows, going through the downside. Price made started making higher lows from these levels, and then you can look to take price to the upside. So as you can see, price started to do his thing and push to the upside, and there you have it. Your 1:1 was hit. You get what I'm saying? So you would have been out of the trade from this trade from here, right? And then from there, as you can see, there was structure. Price will always give structure as it's going to the upside. So as you can see from here, price started to break structure. You get what I'm saying? Price started to break structure from this level. So you see this higher low which price had over here, right? Before this candle was made, right? You see price made a higher low over here, and this price went to the upside. You get what I'm saying? As price was building structure going to the upside, price made a higher low, made a higher high. This higher low was broken. Price broke below this higher low. You get what I'm saying? On the 15-minute. So you found also a shift in market structure. So now you can drop down to the likes of 5 minutes. You get what I'm saying? As you can see, like I said, price was giving higher highs and higher lows to the upside. So price broke below this higher low that you see over here. Price broke below that. As you can see, if I should put this thing on, this higher low, price higher high, price ended up breaking below that area. So that also should indicate a shift in market structure. That price is now looking to go to the downside. You get what I'm saying? So as you can see, our entry model, whenever on the whenever you get a trade like this, if price makes a shift in market structure below a level where you got an indication it has went up to all the way up to correct, so this you want to see a price give you a lower low and a lower high, obviously, so you can take it to the downside. You get what I'm saying? So one of the entries that would have played out for you is price giving a lower low and a lower low. You just need a lower high. As you can see, price gave you a lower high over there. So before that, price, like I said, price gave you a lower high, but before that, as you can see, price was going to give you a lower high over there. You get what I'm saying? So you can mark off this over here, this low over here, and have a sell stop waiting at this area. You get what I'm saying? You can have a sell stop waiting at this area, right? So when a sell stop waiting at this area, you can then be able to look to take price to the downside. So now we can be able to shift to the likes of 1 minute. You get what I'm saying? You can be able to shift to the likes of 1 minute, and as you can see, price was coming to the downside, triggered your entry, right? Your stop loss would have just been above the lower highs. You get me? Your stop loss would have just been above the lower highs, and your TP would have been probably been a 1:3. You get me? So yeah, 1:3 or something of this nature. You get what I'm saying? So in terms of entry, let me just beef this up a bit. Yeah, let's beef this up a bit. Get what I'm saying? Yeah, all right. So let's start again. Right. So you would have a sell stop waiting here. You just need a lower high, and as you can see, as price was pushing price to the downside, right? It triggered, a stop loss just above the lower highs. Just gonna give you a prime example. 1:3 would have been somewhat somewhat over here, if I'm not mistaken. Yeah. So as you can see, price would then trigger your entry. There was your entry. You would have a buy stop there, stop loss just above, on the lower highs, obviously. So just just above the lower highs, and as you can see, price ended up panning out, going to the downside as price was coming, to correct that level, and price ended up going to the downside, right? So you get what I'm saying? Price ended up going to the downside, as you can see. There was price going to the downside. Get me? So price ended up going all the way to the downside, right? So on a 1:3, this would have been your 1:3 just above here. Get what I'm saying? So that would have been your 1:3. So I highly recommend a 1:3, not because of I'm saying, I don't want people to come and, take everything to the downside. No, you can do that, but my thing is also price can remember that price can also come and make a higher low and go all the way up. So having a straight away target helps you with dealing with grade. It helps you with managing your trades. You understand? It helps you with all of that. You get what I'm saying? So you being in that trade in that moment, helps you very much because of now you have a target that you're gonna go look for. You get what I'm saying? It's not something that you're gonna be struggling with in terms of your own trading. You get what I'm saying? So you just gonna be there on the trade, obviously, as the trade unfolds. Because now, if you're gonna be looking to take the move all the way to the downside, it's not gonna pan out for you. You get what I'm saying? So as you can see, price started to move to the downside correctly as it was, and it started to unfold back down to the downside. You get what I'm saying? So those are just some of the things that you can do to be able to help yourself, or look at what price is doing, understanding market structure. Also, you understand, knowing when to enter the type of trades that you're gonna be looking to take to the downside as price is unfolding. You get what I'm saying? So those are just some of the things that you can look at and be able to execute as price is going to the downside. You get what I'm saying? So pretty much as price, as you can see, price was going to the downside. Price came all the way to the downside, and your TP was hit, and price ended up coming all the way to the downside. So that means now you would have had that trade, the first one that I showed you with a stop loss above here, that 1:1 would have also hit. But also with this 1:3 that we always do on the Hustle University would have also hit. You get what I'm saying? So right. So now one of the things that I'm also gonna show you, all right, yeah, one of the things I'm also gonna show you also is gonna be this, right? So on the 15 minute, if you can see clearly on the 15 minute, right? I'm just gonna delete this, right? On the 15 minute, as you can see clearly, if you understand market structure, price has been going up, giving higher highs and higher lows. You get what I'm saying? So now price going started to build lower lows, lower, lower, I mean, this was a lower low, but this was a higher low on a 15 minute, right? A lower high, lower low, lower high, and then price went to the downside. So we had also another shift here where price broke below. Say same thing as what happened over here. You get what I'm saying? So price broke below that, also gave a lower low and a lower high. This one price corrected into, you know, here price corrected into the previous, you know, lows, which was this lower low, which was created on the 15 minute. Remember, you can find trends here. 4 hour, 1 hour, 15 minutes. So if you find a trend in 15, that means you have to go to 5 and 1 minute to get entries. You know what I'm saying? So now we have this is more for a breakout or indication, price going up to quarter, giving a lower high, and then as you can see, price went to the outside, giving a lower low and a lower high. You get what I'm saying? So, but now one of the things that will that helps this trade also is that you have that indication on the bigger time frame. You know what I'm saying? You have that indication on the bigger time frame. So whether you're gonna take a 1:1, if you were going for a 1:1, your trade would have looked somewhat like the stop loss just above the lower highs, and then your 1:1 would have just been just about here, right? As price was coming from that 1:3 and to hit your TP, also your 1:1 would have been hit because stop loss was just above the lower highs. Just like I was showing you, 1:1, don't need to be greedy. You can do a 1:1. That is still growth. That's what will work for you. That is what gonna help you with building that trading plan because you have to treat your trading as a business. That's the most important part. Um, One of the things that you need to do. You know what I'm saying? So you have this happening also to the downside. Also, one of the ways that you could have also got in same trade, same entry method that we had going on here. It also happened to the downside. As you can see, price broke below, gave us a lower low and a lower high on the 5-minute chart. This would have been that level that you would have marked your entry from here, stop loss, I mean self stop waiting here, stop loss just above the lower highs, which were this. As you can see, price created that lower high, so stop loss are just going to be above the lower highs over here because you're under a 15-minute indication. So as far as your 1:3 is concerned, your 1:3 would have just been hit over here, so this would have been your other 1:3. So it's just all about understanding, you get what I'm saying, understanding price as it does its own thing. You get what I'm saying? So now obviously we have price broke that has breaking below this 15-minute level also where the indication ended. So but as you can see, price went all the way. So now price can look to correct from to these levels over here. So what we want to see also as price is correcting to the upside, like you see, price is giving that correction to the upside, so it probably can go to the downside. We can either do what, you can either be able to have that also happening, stop loss just above the lower highs which were created before the indication. 1:1 would be just above, just below here. You get what I'm saying? Or or you can have that entry model that I was talking about that we use at the Haas University. You want to be in correlation because price is giving lower lows and lower highs. You want to see price break below, give a lower low and a lower high within a shifting market structure, and then go to the downside. So that will also be one of the trading opportunities that you can be looking forward to. You know what I'm saying? So price would give a lower low and a lower high, probably on the 5-minute, because the indication also is on the 15-minute level. You know what I'm saying? So you can look to take price to the downside. Once price gives you a lower low and lower high stop loss just about the lower highs that will be created, and then you can look to take that 1:3 to the downside. So as you can see, there's a lot of trading opportunities just from this 1 hour indication price correction, doing that correction, and then that continuation to the downside. If you know how to spot market structure, and if you know how to do all of this, then things get much, much, much easier for you. You know what I'm saying? Don't forget the trends. You find trends on 4 hour, 1 hour, and 15 minute, and then entries on the 15:4, I mean 15:5 and 1 minute. And also don't forget, time frame correlation, right? Correlation of time frame, right? Correlation of price. Why is it important? Because as you can see, price made a lower low, went up to create a lower high, right? All of these entries to the downside, what do they have in common? Lower low, lower high, lower low, lower high, right? So even on the ones on the 5-minute, what did they have in common? Lower low, lower high. You get what I'm saying? So hence lower low, lower high. Also over here, lower low, lower high. That would have been the trade of the day. So in terms of, there's many ways to kill a cat, there's many ways to skin a cat. So in terms of building your trading plan, the maximum, go for a 1:3. There's no need for you to be saying, no, I want to hold the whole move to the downside, but you don't know if it's gonna do that. You don't know it's gonna do that. You get what I'm saying? There's no certainty that price will definitely do what you think it's gonna do. So you have to react to what price is showing you at that time, at that very moment. You get what I'm saying? So understanding market structure and price action is very, very important for your trading. You get what I'm saying? And obviously going back to our the Hustle University. As you can see, I just want to show you guys how this we had our live session today. our live London session, we also had one of, as you can see, people are hitting those, TPs. This was on Nasdaq that he got on Nasdaq. Just from understanding market structure, as you can see, he was plotting that market structure to the upside. So he took it also off of that high, right? That's where the entry came from. High price came all the way. Stop loss just below that. As you can see, people are, you know, people are getting into also this high, got into that stop loss, just he adjusted this stop loss as price was going to the upside. So as you can see, the guys are pushing, man. The guys are pushing. This was on gold, also more or less the same entry, right? So as you can see, he was holding till 3K and his TP did hit. We hit TP. So all those kind of things. So we don't share signals. I don't share signals over here, guys. There's no sharing of signal. I don't do signals. We teach market structure. This is strictly mentorship, and you get to learn. You get to do these things on your own. You get to see it unfold. You get to learn all about this thing. And I'm gonna be there on the group 24/7 with you. You get what I'm saying? So helping you out. There's gonna be one-on-one sessions also if you're struggling with other things in terms of also how to build your own trading plan, all those kind of things. And as you can see, price, these guys, man, I'm very proud of the community. We've just been only open for 2 months. This is our second month actually. So as you can see, man, like, you get what I'm saying? Like, this is crazy, man. This is crazy, guys. This is very, very crazy. So those are the kind of things that we aiming for. Like, these are the kind of things that we want to see happening. The guys are making flames, and the guys are getting those payouts and all those kind of things. You get what I'm saying? So the guys are killing it, man. You get what I'm saying? So you're gonna have that community that is there with you. That kind of community that is there. Obviously, our daily sessions. Also, we do have, there's the sessions that we do. If you're a busy person, you're working, whatever, we do record the sessions that we have. So this was today's sessions, as you can see, 25th November. These were today's London sessions. I did record them and also put it on the group for replays. And also, we just started with our ICC mastery lessons from yesterday. So we also recorded that and also have them put them on the group. So just like today, we're gonna record also some of those sessions, and we're gonna also. Here's the thing. Here's what people don't understand on the group. You get what I'm saying? So we having all of those things happening. But other than that, uh, yeah, pretty much, guys. It's all about having a trading plan, understanding market structure and price action, and how to apply ICC on both bigger and smaller time frame, and how to take opportunities when you get into the market. It's not about a session, or are you in a session. As long as the market is open, you can be able to execute and take those trades. And yeah, you get what I'm saying. So regardless, like I said, as you can see here over here, we did say price, we want to see price correcting. As you can see, price is correcting back to this 15-minute level. So hopefully we can be looking to take those trades to the downside. You get what I'm saying? So either way, um thanks for watching these videos, guys. Don't forget to like, subscribe, and turn on your notifications, guys. If you want to join the Hustle University, there's gonna be a link that's gonna take you to the free Discord. There's gonna be a link that's gonna take you to the free Discord. As you can see, you're gonna be a link that's gonna take you to the free Discord, and then you can be able to text me on that free Discord privately, and then we can talk from there. All right, guys. Enjoy and have a good day. Thank you very much for watching. Bye.